Well, I've definitely had better Mondays in the market. If you're new here, hi, my name is Matt, and I'm a degenerate trader, and I'm in the middle of a comeback tour. A couple Fridays ago, I took a horrible hit to my trading account, and I'm documenting my recovery process and also giving you the TLDR of what happened in the market that day and what to pay attention to in the coming days, and that's exactly what we're doing here. Today, as I just said, not my best trading day ever. Fortunately, I did make some money, so I want to break that trade down for you. But most importantly, I want to let you know some of the interesting developments in the market today in terms of news and price action. But most importantly, what to pay attention to for the remainder of this week, because the week right now we're about to have is going to be an incredibly volatile one. So I want to let you know all the major things that you should be having on your watch list, your alarms, your calendar, and all that good jazz. Now, obviously, if you haven't already, don't forget to hit that like button. Don't forget to subscribe. With that being said, let's rock. By the time the closing bell went dingity ding 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 today, Monday, March 18th, we had an interesting day to say the least. Stocks rise after 2 losing weeks. Alphabet leads tech higher. I'll be touching on that latter part, but first, for rising, so did my account. Currently standing at 42,427 after having a pretty nice gain of $1,700 and some change after today's YOLO 0 DTE trades. And that's what I want to start off with. I want to break down that trade. Sign up for Locals, macros.locals.com. Not only could you get this information for free, but that's also how you can get connected to the Goonie Discord if you want to trade with me and with other people. Obviously, if you use the code Goonie, all in the link below, you'll be able to get a 1 month free of access to see if it's your speed. I really think you're going to enjoy it. But anyway, here's what happened. In the Discord, right around 10:15, technically 10:12 in the morning, my trading system Piper fired off, and she said, hey, I'm bullish with 4 out of 5 confidence. It was a SPY put credit spread, a Q put credit spread, and if you know how the market ended today, as I'm about to show you, the SPY one ended up hitting, but the Q one did not. So the signal, if you took both, would have returned minus $114. If you just took the SPY, you would have been ahead by about 38. And then obviously just the Qs, you would have been down by about 152-ish. For me, I chose to execute the trade through the S&P 500 index, SPX. Here's the timing of my trade. Sold at 9:45, got out at 3:21, made about a 75% return. And after fees, that was about $1,762 on the day. Even though I made money, and I'm in no way saying, hey, this is a little bit of money, because in fact, I fully understand and respect that it's a lot of bit of money, and it's another step forward in my recovery journey after I blew out $46,000 a couple weeks ago. But I have to admit, I've had days where I'm down a lot more that were easier than this. And the reason for that being is right around here. Right around 10:40 in the morning, feeling pretty good. A bullish chart, a comeback to the EMA cloud, and a nice retest and explosion higher. At this point, pretty much all up to 11, I'm feeling like I crushed it. And then the funniest thing happened. It started trending down. I started sweating my position a little bit, and all of a sudden I'm seeing the lower highs, the lower lows. I was like, well, that's not a good trend. I'm looking at the options market, the 0 DT and the all expiration delta notional. That's vomiting, not going my way. But I'm like, you know what? At least the EMA cloud is green. The bulls are, by this definition, in control. And then it's getting real close. And my rough level is about 513. And as you can see from the start, I'm sweating it. I'm sweating. And in fact, the level that I sold, which I wanted above that for the full profit, didn't get tested till the very end of the day, and I had taken my profits, fortunately, just before that. But just for how close we were getting. We were flirting like we were cousins from Alabama, just getting a little bit too uncomfortably close. I was white knuckling all day. I sat there, and even though I was technically never tested, it just was a little bit too close for comfort. And right around 3:20, 3:30, I was like, you know what? I've had enough with today. A little bit of green is better than potentially a lot more red. So I just took my profits. And man, oh man, I'm just, here's to hoping that tomorrow's a little bit easier, because I thought I was reading things well. I love the opening, but just this chop in here, your boy almost got chopped up. And I'm just really, really hoping that this isn't indicative of the week to come. Speaking of the week to come, you should know some of the major news that went down today and also the big events that are coming out for the remainder of this week. Apple is in talks to let Google Gemini power iPhone AI features. So right now, obviously, unless you've been living under a rock, you know that the hot news in the world of tech and the markets and the economy is AI and everything AI is going to do, and this company ripping to the moon, that company ripping to the moon. So something to consider, and obviously this was a big benefit to quite a few companies. Alphabet shares up 7% on report Apple is in talks to license Gemini AI for iPhones. Obviously, this would be a big win for Apple that doesn't have its own prolific AI at this moment in time, and it would also be a big win for Gemini, which is kind of behind some of its competitors of what we're seeing at the likes of OpenAI, aka Microsoft, and some of the things we're seeing from China. So it'd be a big win for them, but not everything had this type of bullishness today. Bitcoin slips further below 68,000, adding to the weekend loss. So as of right now, Bitcoin trading just above 67,000. Like I said, a bit of a loss. The overall crypto sphere still above 2.5 trillion. But right here, just over the past couple of days, lower highs, lower lows. Now, kind of similar to the intraday market for the S&P 500. I like that the cloud is still green. I like that these EMAs are pointing to the upside. This could just be truly a healthy pullback, a healthy consolidation, but obviously I would very much want to see 64.5 thousand hold. Now, with that being said, please understand there's still a lot of bulls in the market. Standard Chartered raises year-end Bitcoin forecast to 150,000, sees a 2025 high of 250,000. And on top of that, it's saying, hey, if there's an Ethereum-based spot ETF approval in the US, they're looking for ETH to rip all the way up to $8,000. So potentially a lot of bullish enthusiasm in the medium term. But right now in the short term, obviously past couple days, the weekend, not the best one. But if you ask me, it's indecisive. As of now, I would argue the bulls are still in control, but we'll see what plays out. Now, there are certain subsectors of crypto that is looking phenomenal, such as Solana, ripping higher highs, higher lows, and the other one that is looking absolutely phenomenal is Avalanche, AVAX, higher highs, higher lows. So if you caught that, massive congrats to you. Now, with that being said, not everything is looking so hunky-dory. So I do want to bring up Apple recently getting hit and covering on the story that we just really spoke about of the partnership potentially with Gemini. It's not written in stone, but it seems like it's close. Anyway, Apple, lower highs, lower lows on this nose, popped up, tried to push, but ended up getting smacked. Google fared a little bit better. Technically, it has had lower highs, lower lows, but on this news, after a bit of a bullish push, we did gap up, but once again, not holding that opening value, which I thought was a little bit weird. Since we're talking about it, we might as well do a bit of a chart breakdown right now. NVIDIA almost had its breakout as well above 920. That's kind of the magic line in the sand for me. Right now in real time, there is an NVIDIA event going on. So if they announce something interesting, there might be a big gap up on this one. So I would highly recommend putting it on your watch list beyond the fact that AI has just been really the hot tamale of the market sector this particular year. Meta in a similar situation, looking strong, tried to break out, couldn't do it, but gearing back up in a very similar manner to NVIDIA. Same thing with Microsoft. Microsoft recently hitting an all-time high, getting smacked, but looking as if it's trying to gear up for another move. And we're not seeing much different in Netflix as well. Pushing higher, not holding, getting smacked. So there's a handful of big tech stocks that all tried to get going today, didn't quite have enough ump. And I think some of the things that I'm about to cover, these major macroeconomic events, are going to be the deciding factor of do they keep ripping to kingdom come, or is a bigger smack about to happen? Now, on the flip side of things, Tesla has looked rough. Like really, really, really rough. Like it tried to get going, got smacked, couldn't hold the trend line, vomited all the way to the recent low of 175, couldn't hold that, vomited to another low of 164. And then out of nowhere, had a bit of a bullish day. And it took me a while to find why, but I think it's just because our boy Elon likes his DRUGS. Elon Musk suggests his prescription use is good for investors. Sorry about that. I don't know if I could say it because I think the algorithm will get mad if I say that word, but you could read, and it's usually meant to calm down horses, but sometimes humans do it and they get themselves into what's referred to as a K-hole. So that's interesting. All jokes aside, this did come out and it was from his interview with Don Lemon. But in all reality, the reason Tesla had a pretty good day was because of this. Tesla shares gain after Model Y price hike in US and Europe. Obviously, the market responding well to the increased prices because that should improve their margin. And that's one big measure for automakers. So even though Tesla's been getting destroyed over the past couple weeks, past couple months, today individually, a pretty good day. Now, moving forward, I need to put this on your radar. Even though it's not showing it here, tomorrow, Tuesday, we're going to get a bond auction report at 1 p.m. ET, and it's an important one because it's the 20-year bond auction. Later on this week, the most important day of the week is Wednesday, when we get the results of the Federal Open Market Committee meeting, the FOMC meeting. That's where the Fed, with Chairman Jerome Powell, decides what they want to do with the Fed fund rate. As of now, there's a high 90% chance that we stay at 5.25%. That's expected, but what's going to move the market is Powell's commentary at 2:30 p.m. ET and how the market really interprets it. Is he being hawkish? Is he being dovish? Is he being confusing? Only time will tell, but obviously I will be live streaming that as a special event. If you don't know already, from 9 to 11 every single morning, I run the Matt Kohrs Show. It's a live trading show. Feel free to check it out. It's completely free. And then every once in a while, when there's a specialty event, I end up streaming that as well. Speaking of which, later on this week, Friday, Fed Chair Powell will be giving another public speech. With that in mind, it's all important because everyone wants to know what's going on in inflation, what's going on with the economy, what's going on with the stock market, and how does that all intertwine in a election year? Obviously, massively important. Powell's silence frustrates markets as post-Rona economy shifts. Well, he can't be silent for too much longer, being he has two very televised public speeches this week. So I think his silence is going to end very, very soon. And then for those of you who are interested, who want all this information in more of a bite-sized, readable way, every single weekend, I give you a newsletter, mattkohrs.locals.com. That's how you can get signed up for the newsletter. And it's also how you can get connected to the Discord if you so choose. But anyway, I break down the week, give you an idea of the upcoming week. I let you know about what's going on with all those major macroeconomic events. So just an easy place to find it. For example, Tuesday, March the 19th, 20-year bond auction, 1 p.m. That's arguably the most important. I give you an idea of the earnings and highlight the ones that I think you might care about. But most importantly, I give you the seasonality. Today, from a historic standpoint, very, very bullish. And actually, we did technically end the day in the green, which was a bit interesting. But anyway, tomorrow, Tuesday, we're going to see that it's actually not much is going on for the 19th. It was a bit bullish, then turned a bit bearish. So in terms of seasonality, I wouldn't expect choppy. I'm more so just not taking it into any of my decision making. And then also I give you a breakdown of how Piper's doing, all the charts that I think are going to be interesting that should at least be on your watch list and all that good jazz. But overall, a weird day. I don't know how to personally feel about it. I probably should do my trading journal and really break down my emotional state, because even though I had a profitable trade, I was white knuckling it most of the day. Like all day we were just kind of coasting at like, should I get out? Should I bail? Should I throw on a protective iron butterfly? And eventually I ended up just taking my money and saying, hey, I'm done with this. But man, oh man, I'm really hoping the remainder of the week is a little bit easier than today ended up being. That's what I have for you on this one. I hope you enjoyed the video. I appreciate your time. I'll catch you in the next one. Peace out.